If you run a small business, maybe a local shop, a trading business, or you sell products online on Amazon, Flipkart, Miso, Shopify, or even Instagram, then this one section of the Income Tax Act can make your life much easier. Yes, you will have to pay tax on a very small percentage of profit and avoid complicated bookkeeping, avoid tax audit, save time, and reduce CFAs. And everything is 100% legal. This powerful provision is called Section 44AD, that is Presumptive Taxation Scheme. But many small business owners either don't know about it or don't fully understand how to use it properly. So today in this video, I will explain in simple manner how Section 44AD works, its latest rules, simple examples, who can use it, and important mistakes to avoid. Hello everyone, I am Suraj and welcome back to the channel. Alright, let's start. So what is Section 44AD? Normally when you run a business, tax compliance can become complicated. You may need to maintain books of accounts, expense records, purchase records, stock records, profit calculations, and sometimes even tax audit. For many small business owners, this becomes time consuming and stressful. So to simplify taxation for small businesses, government introduced Section 44AD. Under this section, you don't need to calculate actual profit. Instead, government assumes a fixed percentage as your profit on your turnover, and you pay tax only on that assumed profit. So compliance becomes much simpler, less paperwork, less calculation, and less stress. Who can use Section 44AD? Section 44AD is mainly for small businesses involved in selling goods. For example, traders, shop owners, retailers, wholesalers, small manufacturers, e-commerce sellers, Amazon sellers, Flipkart sellers, Miso sellers, other D2C brand owners, resellers, etc. Basically, businesses involved in buying and selling products. But this section is not for professionals like doctors, lawyers, consultants, freelancers, designers, etc. They use Section 44ADA instead. Latest turnover limit. Currently, Section 44AD can be used if your annual turnover is up to Rs 2 crores. But there is an extended limit of Rs 3 crores if cash receipts are within 5% of total receipts, meaning most payments should be received through digital modes. Today, many businesses receive payments via UPI, bank transfer, credit or debit cards, and online payment gateways. So many businesses can qualify for the higher limit of Rs 3 crores. How taxable income is calculated? Under Section 44AD, government assumes your profit is 6% of turnover for digital transactions plus 8% of turnover for cash transactions. So instead of calculating actual expenses, you simply apply these percentages, which makes tax calculation very easy. Even if your actual profit is higher, you still pay tax only on this presumed profit. Let's understand with a simple example. Suppose your business turnover is Rs 80 lakhs. Out of this, Rs 60 lakhs received digitally and Rs 20 lakhs received in cash. Now, taxable income will be 6% of Rs 60 lakhs, which is 3.6 lakhs, and 8% of Rs 20 lakhs, which is 1.6 lakhs. So, total taxable income will be 5.2 lakhs. That's it. Even if your actual profit is Rs 10 lakhs or 12 lakhs, you still pay tax only on Rs 5.2 lakhs. This is why many small business owners prefer this presumptive taxation scheme. Important rules to remember. Before choosing Section 44AD, keep these important points in mind. This section is available only for resident individuals, HUF, and partnership firms. It is not available for LLP and not applicable to professionals. If you declare profit lower than 6% or 8%, then books of accounts and audit may be required. Once you opt for Section 44AD, you should continue for 5 years. If you opt out earlier, you may not be able to use this section again for next 5 years. So if you run a small business, Section 44AD can significantly reduce compliance burden and simplify taxation. Understanding these tax rules help you keep more of what you earn. That's all for today. If you found this video helpful, please hit like and subscribe for more such content. Thanks a lot for your time and let's take care of this beautiful world. I'll see you in the next video. And smile. Always smile.